Hello, hello, hello. Mic check, mic check. One, two, three. How's everyone doing today? Hope you're doing really well. Thank you for joining me, especially in this afternoon here. Just wanted to basically say thank you again and appreciate all of you guys supporting the channel. It means a lot. And also, thanks for all the folks that like the video. And yeah, it feels really good to be able to help and just share my opinion to the retail community space. So we have some great due diligence I would like to share with you guys, some graphs that you will definitely enjoy, along with some due diligence that we looked into in the stock terminal that I believe will be worth your while here. Okay, so definitely comment down below, tell me what you guys think. But we're going to go ahead and just start right now, and this is a live, and we'll see, hear what you guys say. So overall, what are we looking at here? Okay. So we're looking at, well, first off, I always like when I always look at, so I made this graph, right? And the first thing I like to do if I read someone else's graph, I always like to look at the title, right? So Clover Health, book value versus share price, right? So what is book value? Well, the best way, kind of just a cutthroat approach way, just very simplistic. What is book value? If we go ahead and take all the assets subtracted from the liabilities, you essentially get the equity of a business. Now, what does all that mean? What are assets? What are liabilities? What are equities? Essentially, if I were to buy this business right now, what would be the bare bones? If you subtract all of Clover Health's debt, all of their obligations, what would be the price of the company? And, what you can see here in black, let's go ahead and hide this because I'm sure you can see this. Let's hide that. You can see here in black, the book value is pretty low, right? Now, if you look at Apple, you would think Apple's book value is in the up teen numbers. Actually, Apple's book value is $4, right? So for technology companies historically, there's other tech companies that don't follow this rule. They tend to have a really low book value in comparison to their actual market value. So as you can see, if the share price here is in green, if you were to purchase Clover Health back in 2021 and in 2022, what you're doing is you're getting the stock at a level that's higher than the book value. Okay. However, as time went on and the stock price dropped, we got to a point where we're literally buying this company at liquidation prices. We're buying the company pretty much at book value, which is extremely rare, right? Last time this happened, well, it was a lot of times, but I'm just one example would be Energy Transfer when the barrel per oil went down negative $30 or whatever. You could have gotten it Energy Transfer at book value, right near it, right? And people that secured that are making a killing in dividends right now. And obviously, 3, 6, 9, 12 by 4, 5x their money. Okay. So, and that's an oil company that just literally has natural gas, right? Natural gas pipelines and Energy Transfer going in Texas and whatnot. It had some, issues with the public, but be that as it may, you can see here that the book value we're starting to get at is a level where Clover Health is essentially, it's such a deal because your margin of safety is getting to a point where, we usually, when we speak margin safety, the graph here is usually intrinsic value. I put book value here, but this is rarely seen. It's very difficult to see a company go next to book value. Okay. So what are hedge funds? What are big money? Like, what is big money doing? Right. So the first thing is we can look at Jim Simons, who most people know of Renaissance Technology, one of the greatest. Oh, by the way, hello, Danny. I appreciate it. Yeah, comment down below. Would love to, shout you guys out, say hello. Renaissance Technology, hopefully I'm not butchering the name, is a firm that has literally had amazing explosive growth over the past 20, 30 years. We made a video about them. Just got to search it through our little YouTube channel. But interestingly, you can see that in Q2 of 2023, Jim Simons increased his shares by 29.29% at approximately 2 million plus shares, as you can see in this green line. But what's interesting is you can see that he's been pretty much, I guess the proverbial buying the dip, and he's been literally doing that every quarter. He's been just literally buying and buying and buying and buying and buying, okay? And overall, he has 11.9 million shares of Clover Health. Number 2. The second person is you guys know him, Ken Griffin, who's not really popular in the retail community space, Clover Health. He went ahead and sold right near the squeeze of Clover, bought back again, then sold. And again, a lot of these are hedging, right, in terms of shorting the stock. And then sold, and now guess what he's doing? He's buying, right? He bought here, and he does these little confusing tactics of selling 50,000 shares. That's nothing in comparison to pretty much a total net ownership of 5.35 million shares. He most recently increased his position by 185.7%, giving a increase in shares to 3.48 million. And as you can see, what is he doing? He's not buying up here. He is buying the dip. So if I were to just kind of give an example, and I'm sure there's other bits of data that I just don't have at my fingertips now to show you, but a lot of, I'm trying to find the those little screenshots I took that kind of really paint a really good picture of what's going on. So if you were to look at this, guys, you can see retail investors selling at a loss. Okay, someone tipped him, I think, right? Poor guy. $408. I'm sorry, 408 days, sold at a 71% loss. Buy high, sell low, selling at a 13% loss. Holding for 486 days, selling at an 82% loss, high risk. Selling at a 74% loss, right? While these folks are literally in this region coming in and buying these depressed shares. Again, retail investors buy high, sell low. Institutional investors, hedge funds, buy low, sell high. So why am I making it a point of talking about book value per share and actually the shares for Clover Health? Well, it's interesting because if you analyze Chamath polyhypatia, okay, and you go to this document here, and you go to the spreadsheet, as you can see, there's a lot in this spreadsheet. I went ahead and posted it on our stock terminal here. You can see if we go to the second tab or third, I put it in the second, and if we were to zoom in, we can see that we have a special, Class A, I say, specimen, that's a special, right? Class A common stock certificate, the S4 here, but you can see it's at $4.50 and $4.60. So essentially, Chamath's original ownership, and you can kind of basically break down Chamath's ownership here in terms of the shares, right? But overall, and correct me if I'm wrong, but this is kind of the average, right? I'm not trying to basically be accurate here. I'm not trying to make 2 + 2 = 4. I'm not an economist. And again, what economist have you seen is a multimillionaire billionaire, or let's say billionaire, right? You don't see them. This stock market world and Wall Street, you don't have to be a genius to win, right? And a lot of folks that go to universities, institutions like myself, we like to focus on the technicals and know the itty bitty numbers, right? None of that matters. 8 + 8 can equal 14. Because if you find 8 + 8 is equal to 14 at $2, you're a fucking millionaire. Doesn't really matter if it's 16, 15, or 14. You're able to find the value and you got it. Okay. So overall, Chamath has been given 11 million shares and invested in 20-ish million shares invested, right? Which is right around the ballpark of the area here. However, he sold 11.29 million shares. Essentially, his free shares he sold at around the $2-ish region, which I'm sure if you can look at the SEC filing, which is right here, and then there's another SEC filing, you can basically see all the numbers in the due diligence. But to just basically sum it up, he still owns 19 million shares left, or at least that's what we think, because if a share count is under 4.5%, he does not have to sell. He does not have to notify you, right? And whoopsies, he doesn't have to notify you. Okay. So very clearly, if I can get this stinking Reddit page to work, I'm going to see if I can find a post that I commented on someone's comment regarding see, there's just so many. I don't know. Maybe comment would be a better one. I gave someone, there it is. Okay. So someone commented, is it true that under 5% he wouldn't have to disclose it? I mean, guys, it's a simple search and due diligence, but again, most folks don't have the time. It's okay. That's why I'm here kind of giving you guys, where to find this information. But if you go to the sec.gov, you can go here and, Control Find F, and then you can basically read it. If your company has registered yada, 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 a shareholder who acquire more than 5% of outstanding shares of the class must file a beneficial ownership schedule 13D, 13G. Okay. Until their holdings drop below 5%. And like I said, his holdings now is 4.99%. We already know this guy likes to play poker. So he is wanting to sell the story that he sold out completely in Clover. But the question is, why would someone sell out of Clover at $4.50, but lower than $4.50 when he got in at $4.50? And he put 150 to $200 million ish in Clover Health. Why would someone do that, right? He sold out on the 11.29 million shares, which is equivalent to his free shares that he got, and he was able to tax loss harvest that. But I think he still may be in. Regardless, if he is or isn't, as Clover gets over to that $2 region, which is the kind of average where he's at in terms of where he sold, there's a high probability he's going to jump back in, and then you'll be able to see it in the SEC filing, right? So, it depends, or he might just stay under 5%, or maybe he did just sell, and that's just the solid truth. But overall, we can't deny this fact, right? Regardless, Chamath, Bamoth, Gamoth, Zamoth, whoever, we can't deny the fact that Clover Health's book value just increased by just a certain penny because of their pivot point into profitability. Okay. So overall, what does this kind of mean, in terms of, what is my mind seeing in all this is that Clover's working towards its profitability metrics this year. We already know they like to be conservative in their projections in terms of when they will reach profitability. So we know we're going to get a surprise. The question is, how fast of a surprise are we going to get? Now, it doesn't really matter in terms of if we get it sooner or later. I mean, I guess it matters for the morale of the community in terms of seeing green in their portfolio. But in terms of short interest, a lot of people that have shorted the stock have left because they're smart, right? And now, once they do achieve profitability, which again, I've consistently stated in the channel, look at all my videos, I've consistently stated 2024, late 2024 is when I believe they're going to be free cash flow positive. And it looks like that is coming into fruition. Just look at the videos I made since 2021. I've been saying it over and over again. So much drama, reverse stock split, this coming here, retail investors crying, retail investors literally, blah, 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 and I've basically been a rock in an ever so expanding storm. And I've been literally like a rock. And I've just been seeing emotions and tears everywhere. And I get it. I understand. Wall Street always wins. Chamath basically says, selling Tesla now will be like $1 billion problem. I would not, and as he was selling Tesla, I get it, right? But I don't listen to what comes out of his mouth. I listen to what he's not saying. And I listen and I follow the numbers, right? You can't fake the numbers. And if you do, well, then that's fraud, right? That's fraud, right? And then that's a whole different story, right? I don't believe the numbers that Clover's putting out are fraudulent, right? They work with the government, and the government would have just been all over them right now, right? So overall, once Clover achieves its milestone in profitability, I believe in the next 24 months, we are going to see the Federal Reserve potentially start decreasing interest rates. The question is, are they going to start decreasing interest rates because there's a problem and there's a hard landing and a depression, like in terms of a recession? Okay, not good, but it's okay. You have a healthcare. This is a healthcare company which thrives in both recessionary and non-recessionary environments. You can see there's a lot of added protectors here. And the lower the price has went, for all the people that took advantage of it, they're sitting really good right now. For the people that waited or just didn't do anything at $8, or, I'm sorry, for the 2020, before I even got into Clover, 2020, 20 plus, those folks, not investors, they were for the squeeze, right? They were for the squeeze. Okay. Once Clover achieves this, then they're going to turn on their growth machine. They're going to push up that growth engine, right? And what I'm going to be doing is I'm going to be trying to calculate when they are going to dilute shareholders, not because of profitability metrics, but the dilution of shareholders based on the ability to grow, because that's what the economic Wall Street wants. And Bank of America is pushing that, but pushing it too early. No, let's focus on profitability. Let's do it the right way. Let's prove the business model. Once the business model has been proved, then many people basically will start coming. But overall, we are already starting to see biomarkers, like little test results that show you that individuals are buying into Clover. Okay? Big individuals, big institutional investors. They are coming in now. Lots of selling down here. But now, with the price was higher, right? In the $5, $10 region, and even 20. But now look at it. People are buying, increasing their positions by over 100%. Okay? So we are getting in a position where it is starting to look very favorable. You're going to start seeing changes in news cycles. And I'm going to laugh and have a ball when I hear a news anchor on an article say, this is how much you would have if invested $10,000 in Tesla 10 years ago or 5 years ago. I'm going to laugh, right? I'm going to laugh. And you guys will have the videos on the YouTube to basically see the breakdown and the due diligence that we have done day after day, week after week, quarter after quarter, etc. Okay? So overall, that's all I have for you guys. If you enjoyed this video, please consider subscribing. And if you enjoyed it and I've earned your like, please do so. And I hope to see you on the next one. And then I hear Chamath doesn't have the balls to say, I still believe in Clover because he's scared of getting bullied. He'd rather just stop talking about it. I mean, I don't know. But I do know is that he is watching these videos, okay? And we've proved that if you look at my previous video, history. We know that he's watching. And, we know that he is looking at this. And I keep commenting on and saying, hey, Chamath, because he's responded back to me before. I'm like, hey, Chamath, tell me if I'm wrong. Tell me if I'm wrong. Please tell me, right? And go on my Twitter, like what I put out so, it jumps up, right? So because again, I'm an arbiter for you guys. I'm trying to be the voice because, Americans are sick and tired of getting screwed Because not only do you get screwed over by Wall Street, and people lost their homes, and some of these people that are watching this right now have lost their homes in 2008. I'm sure there's a certain percentage of you guys that have probably lost family members to addiction. And that was, if you watch the Netflix documentary, Painkillers, you will see Purdue, those pieces of shit basically destroyed the lives of so many American people, all because of capitalism and money. Well, all I'm saying now is it's time for retail investors to learn the language of finance. And I'm going to help you break this down into language that the third grader and fourth grader will understand. Hopefully, if I can, I speak at a high intellectual level, and I'm not bragging. It's just because I've been in academics for 10 years. I'm going to have 5 degrees. I'm going to be a medical doctor, but I'm trying my best to remember how I used to speak because I came from the bottom, and it's easier for me because, I humble myself every day because, where I came from, it's humbling. But I'm going to try my best to explain this to you. And, we already published about 6 chapters in the mastering that will literally take you from zero to hero, right? There's going to be a lot more chapters there, but we're going to break down everything. Okay. So here. So yeah. So I did not join the Clover community when it was $18, $15. I actually joined when they turned on and activated their revenue growth machine. I said, holy crap, if this market continues and they're rewarding growth companies over value companies, then this thing's going to explode. So I came in, I think, around the $7, $8 region, right? That was kind of my area, in that area. And then I've been following it since. And then the Federal Reserve obviously stimulated, and then that led to the increase of interest rates. But once all that noise is done, well, you guys already know. So I hope that was very, informative. I'll see you on the next one. Bye for now.